You can see this number still came in pretty big, larger than expected at 9.1% in June, above the 8.8 Dow Jones estimates. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Wednesday, July 13th. Of course, the big news so far today is that we had the latest inflation report. And even despite the Federal Reserve's series of rate hikes, you can see this number still came in pretty big, larger than expected at 9.1% in June, above the 8.8 Dow Jones estimates. And we'll take a look at some of the highlights from this month's report that marked another month of the fastest pace for inflation going back to December 1981. That was the culmination of stagflation, which is similar to the environment we have now where the market's really experiencing stress. I know there's many different ways that people define a recession, yet a lot of the metrics showing that things are slowing down. And certainly with the higher interest rates, not going to make things easier. You can see here energy prices surged 7.5% in the month and we're up 41.6% on a 12-month basis, which is really pretty shocking. Now, I'd imagine by next month's report, at least with today's oil price, which has dropped quite a bit in the past couple of weeks, might see that energy number come down a bit, but a lot of these other numbers I don't think are going to be falling anytime soon. You see here the food index increased 1% and real incomes fall further. For workers, the numbers meant another hit to the wallet as inflation adjusted incomes based on average hourly earnings fell 1% for the month and we're down 3.6% from a year ago. If you get a 5% increase in your income, but the cost of the things that you're buying are going up by 9%, well, you're actually getting less. And sure enough, that is being realized here. Here's an interesting note. White House officials have blamed the uptick in prices on Russia's invasion of Ukraine, though inflation was already moving aggressively higher before the attack in February. Joe Biden has called on gas station owners to lower prices. Interesting to see that that's becoming a more mainstream view. A couple of months ago, it was just assumed, all right, this is the Putin price hike. Now, even CNBC and some of the mainstream financial media are noticing the flaw in that logic. Interesting reaction in the markets where, at least as of the time of this recording, now the NASDAQ up on the day, Dow Jones and S&P all were down quite a bit more. Bond yields had spiked, although as you see here, now down on the day, you can see that Wednesday it jumped quite a bit and then came in, now down 2.8 basis points on the day, which is interesting because taking a look over here at the CME FedWatch tool, you can see this really skewed the probabilities for what might be coming in the Fed's meeting, and we'll get that announcement 2 weeks from today. This was about 90% yesterday of a 75 basis point hike and 10% for a 100 basis point hike. Now you see the 100 basis point hike has become the favorite at 57.1%, and really stunning to see these historic Federal Reserve interest rate increases at a time where the whole system is so fragile. There's more debt than ever. Not an easy situation for the Fed. One other note about the CPI, there was a fake report going out yesterday. Someone took the time to put together this report and send it out. Although, interestingly, the number wasn't all that far off. They were calling for a 10.2% increase, whereas we only got 9.1%. We see some other news here. The Bank of Canada just hiked its key rate by 100 basis points. So certainly we see the theme here of central banks in North America hiking rates quickly and aggressively. How long they'll be able to do that, we'll keep an eye on. Seems like a fragile time to be doing so, but either case, a quick look over at gold and silver. Quite a stunning reaction in the gold market. You see a big sell-off on the news from, let's call it 1727 down to 1706. So about $20, and then has surged higher since then, which is a little surprising, although a lot of the market's reacting like that today. And we see in silver actually rallying now. It didn't have as big of a plummet down on the inflation report, although up 37 cents. Certainly some positive news in Silverland. It's been a while, but now surging higher on the day. And something worth pointing out that I know does not always make gold and silver investors feel better, but here's a note from Dave Kranzler, one of the regular guests on the show. This is the paper gold market. No physical gold being sold right now, except the gold coins being sold by coin dealers, by smart retail investors taking advantage of the above fraud. Paper trading you see above will result in almost no real gold changing hands at the COMEX. And I would certainly agree with that. Most of the trading that's dictating these prices, it's not like there's physical going from one account to another, which is the way the system is set up. Not ideal, in my opinion, but interesting note here from Bob Coleman of goldsilvervault.com, who was on the show a couple of weeks ago and talking about the wholesale level. And he mentions if there was ever a time for a USA physical precious metals exchange, this is it. Allow good delivery products a chance for true price discovery. And now a quick look over at the transparent silver holdings. This is SLV and the other silver ETFs. You can see big chunks of metal continue to come out of here on the sell-offs, and not entirely surprising as the price is going down. Investors selling SLV and the other funds. Last week, 20 million ounces coming out. This week, almost 3 million ounces. And just to take a look back here, you can see this is started way back in February of 2021 around that silver squeeze weekend and has continued ever since then, even during the times where the silver price has rallied a bit. So the metal continues to come out, although if you hit the subscribe button and the notification bell, I will keep you posted on how that looks going forward. Interesting note over at the COMEX, where metal continues to come out of the registered pile. You see here, another big withdrawal has brought it down to 62.78 million ounces. You can see a rather consistent withdrawal over the past year. Again, the past 2 years, that started at that same time as well, around February of 2021. Backing out on the long-term chart, you can see still more metal than many other periods, although now getting down to 62.78 million. That is lower than what we saw here at that peak in 2015 and lower than some of these levels here. If you take a look at the total COMEX silver stockpile, you can see, while again, that's been coming out since February of 2021, still historically a lot, although I guess that depends on the eligible. And are these investors going to be putting their metal back into the registered stock, or is that investors who are just planning to hold that? We will see as time goes forward. Another note worth passing along here. Here is the silver COT report showing the bank positioning, and you see the blue line. This is how short the banks are. They've really been reducing that short position ever since the sell-off began back in March. It was interesting. There was an article by Ted Butler posted yesterday where he had a reminder in there that the day that sell-off began was the day that the nickel market surged and those trades were canceled. So interesting to see the correlation there, and that this sell-off has occurred ever since then, and we see the banks getting less short, according to the swap dealer report, actually long now. So far, that has not stopped the price decline, although I guess today it did to some degree. But either way, at least a good sign, because traditionally when the banks are less short or even net long, that's usually when the price goes up, and works in the inverse way as well. So here's a note from Zero Hedge regarding the housing market. Last year, one could buy a $500,000 house by borrowing $450,000 at 3.25% for monthly payment of $1958. At a 5.5% rate, that same 1958 monthly payment and 50,000 down can only buy a house priced at 395,000. Obviously, a dynamic that you would expect to be exacerbated with the higher rates. So while the rates actually coming in so far on the day today, we'll see how that looks. It's hard to imagine these rates going lower with the Fed now a favorite to do a 100 basis point hike in 2 weeks. And speaking of other central banks, you may have seen this, but Things not going well in Sri Lanka. Prime Minister stepping down as protesters stormed the president's residence amid public anger over the deepening sovereign debt crisis. The South Asian nation's wilting economy has seen Sri Lankans endure months of double digit inflation, rolling power blackouts, and severe shortages of fuel and medicine, which certainly is quite unfortunate, especially because we're seeing signs of this in other places around the globe. And there were some protests. Here you see people jumping into the pool there. And the president's whereabouts this past Saturday were not immediately clear. So whether this is something that will spread to other nations does seem like a lot of tension out there. And especially when you see the things happening with the food supply, many of you have seen the Netherlands farmers protesting some of the new regulations, which are making it harder for them to grow food. You hear American farmers talking about the same things. Although, one final note before we wrap up, would like to mention that one of our sponsors, Fortuna Silver, did report solid production of 96,712 gold equivalent ounces for the second quarter. And that's consisting of 62,000 gold ounces, 100% increase over 2021. Silver production of 1.652 million ounces, 13% decrease from Q2 2021. You see the 100% year over year was mainly driven by contributions from Lindero and the 24,000 ounces from the Yaramoko mine that was acquired in July 2021. And silver production, a 13% decrease, was primarily driven by a 9% decrease in head grade at the San Jose mine, which is in line with the mineral reserves average grade for the second quarter. Silver and gold production for the first 6 months of 2022 totaled 3.3 million ounces and 128,971 ounces respectively, while Fortuna reiterates its annual production guidance of 6.2 to 6.9 million ounces of silver and 244 to 280,000 ounces of gold. So it's good to see things progressing forward with Fortuna Silver. Appreciate them bringing us today's episode. And that is it for today's show. Although, to find out a little more about what's going on in the gold and silver world, including the JP Morgan trial, which has finally started, where several of their executives are facing RICO charges, well, just click on the video that's coming your way now.